So let's go, guys, with first of all, thank you for the likes and the comments. Uh, I'm really obliged, and I love it when this happens because it means, all this work doesn't go out for nothing. So Golden Cross, no thanks. I ended up being an editor speak. Thank you very much, TradingView, and thank you for the likes and the comments and sharing the ideas. There were some questions, and today we're going to take it a step further. So this was the first Golden Cross part 1. Let's go in the second one. Okay, so as I explained last time, I use my own cross, so my own EMAs, but I explained how the optimal entry came from Trendline or structure. Okay, so frankly speaking, if we're looking at trend lines, I'm going to change the chart for a moment. Okay, so this is a chart that I have trend lines, and this is a 15-minute one. I have my structure. So over here, we just went short for the third time because the price got rejected on the structure. So structure for me comes first. I'm going to keep repeating it. And that was a level where, we had to be aware and go short. The same was here and here. But these two were different. And is this one confirmed? Well, yes, it is. Let's go back to the first chart. Okay, the Trade Nation chart. There we go. So what do we have here? Let's go to the 1 hour. And the confirmation we needed was this, guys, was a divergence. So one of the ways for us to be able to look at possible reversals is this line over here and this indicator, fantastic indicator. Tons of credit to this guy over here. Check the divergence for many indicators. It's an amazing indicator to use. If you ask me how I have it set up, I have it at minimum divergences 3. Okay. Anyways, so 3 divergences over there telling us to be careful. I'm going to share a little secret with you. I do have a layout that is called divergences, and there I have a way more sophisticated way to analyze divergences, but this is good enough because you're able to see 3 divergences here and 2 divergences now positive down here. So maybe we are approaching support. So with this, much better than the moving averages, which comes third, fourth, etc. So I hope this helps a little bit and filling some blanks after the first Golden Cross part 1 post. Every trader has their own style. Every trader will share with you something, but some things cannot be shared. We need to keep something for ourselves. So trend lines, the FXProfessor style, that's the first thing I do. The second thing, take a wild guess, is Fibonacci, and I use the wedge, which completes my trend lines. So up until now, it's all trend lines. And then third, we go to the most important one, which comes third on my charts, but it comes first in my analysis because that's what we use the most times, okay, which is structure. And when I say structure, I mean channels, mostly, wedges, etc. All this trend line, for example, trend line up there, price goes there, it means I'm looking for a reversal. Fibonacci, the same. Structure, the same. Just in case some of you don't understand what I mean by this, you have the price going into an ascending channel. You go long here, okay? You go short if you see a rejection there. You go long if you see a breakout, and then you go short there until there's a breakout in either direction, structure. And then there is wedges. So if the price is moving in a wedge, contracting, it means it's looking for a way out. So expect this or that, okay? Or expect this. And then after that, we have all the, I like to call them secondary stuff, which is the EMAs, Okay, you see now this EMA is offering some support over here, so I can use that for support. Or if I have a complete chart like the one I showed you earlier, where I have the structure and the things, this one is for education. So I can use all these EMAs, divergences, like we had here. We had divergence, so the market can change direction. And other indicators that we use. I use another 7, 8 indicators, depending on the case and what I need to look at. Hope it helps, guys. Let's keep in touch. And remember, before I go, we spoke about lagging indicators like the EMAs. You see, that wouldn't have happened. The EMAs is going to take time to cross. Like if the trend continues and this EMA crosses over this EMA, then we're going to get a signal further down the road, and we probably have missed the action, which was exactly there at the divergence in this case. And coincidentally or not, I'm telling you not, it was exactly there where we had the rejection at this structure. I'm happy to share with you the things I use and in which order I use them. I need to keep some things for myself, but I think it's more than enough for you to start looking at trading with what I call the trading rethought way. Let me know your comments, and I'm coming up soon with something that is going to take your trading view experience to another level. That's a promise. Love you guys.